Hello everyone, I'm Rachelle Antonette Pactor, and for today's presentation of Pecha Kucha, I will discuss the introduction of maintenance costing and budgeting. Introduction. All the big manufacturing units maintain their own maintenance and repair department to ascertain the exact cost of each maintenance or repair work. A series of service order accounts are open. Each service order will be given a distinct number and will be debited with all expenditure on material, labor, or other direct charges for repair and maintenance. An addition is also made for works and office indirect expenses on a suitable basis. The total will then be included in factory overheads and is also used for maintenance planning, budgeting, and control. Maintenance costing and budgeting. Maintenance costing and budgeting is a planning and control technique to improve the functioning of maintenance department. The costing of the maintenance is best devised and operated on the basis that it is an accounting process administered through finance department but established in close collaboration with maintenance management so that their joint needs are met. Similarly, the exercise of preparing budget must result from discussion between the maintenance management, the production management, and the financial control. Maintenance costing. Costing is the technique of ascertaining costs. It consists of analyzing, recording, classifying, and appropriate allocation of expenditure for the determination of the cost of products or services, comparing against standard or budgets, reporting and recommending. It renders information for the guidance of the management for proper planning, operation, control, and decision-making. 3 steps of the costing maintenance involves. First is collection and classification of maintenance costs. Second is departmentalization of maintenance costs. Third is absorption of maintenance costs. Collection and classification of maintenance costs. Some of these activities are as follows. First is cost of manpower and facilities dedicated to maintenance department for repair and maintenance. Cost of preventive maintenance to improve the availability of the assets. Cost of resources like equipment and other facilities for condition monitoring and diagnostic maintenance. Cost of materials like spares, lubricants, and other consumables, tools, etc. Cost of purchase and stores department looking after the activities of maintenance including salaries of clerk. Cost of stationery, printing of formats, computer, and accessories. Cost of subcontracting maintenance work to outside agencies. And last, cost of training of maintenance personnel. Maintenance costs may be classified according to their nature, function, and a number of other characteristics. Departmentalization of maintenance costs. After classification and collection of maintenance costs, the next step is distribution of costs to the different processes, equipment, product, or departments. It involves the allocation and apportionment of maintenance costs. Absorption of maintenance costs refers to a method of costing to account for all the costs of manufacturing. Management uses this method to absorb the costs incurred on a product. The costs include direct costs and indirect costs. It includes raw materials and labor use in production. Maintenance budgeting. A budget is a detailed plan of operation for some specific future period. It is an estimate prepared in advance of the period to which it applies. Different types of budgets are prepared by an industrial concern for different purposes. The maintenance budget is an estimate of its requirements for spare parts, manpower, consumable, and other expenses. It is prepared to bring efficiency and economy in the maintenance activities. Purpose of budgeting. Budgeting tools provide a forecast of revenues and expenditures that is construct a model of how a business might perform financially if certain strategies, events, and plans are carried out. We have 7 types of budget. First is sales budget, production budget, capital budget, revenue budget, expenditure budget, cash flow and cash budget, and zero-based budget. Sales budget, an estimate of future sales often broken down into both units and currency. It is used to create industry sales goals. Production budget. An estimate of the number of units that must be manufactured to meet the sales goals. The production budget also estimates the various involved with manufacturing, including labor and material. Capital budget. Used to determine whether an organization's long-term investments such as new machinery, replacement machinery, new plants, and new products are worth pursuing. Revenue budget. Consists of revenue receipts and the expenditure met from these revenues. Expenditure budget includes spending data items. Flexibility budget, it is established for fixed cost and variable rate is determined per activity measure for variable cost. Appropriation budget, a maximum amount is established for certain expenditure based on management judgment. Cash flow and cash budget, a prediction of future cash receipts and expenditure for particular time period. Zero-based budget, it has clear advantage when the limited resources are to be allocated carefully and objectively. We have a function of budget: planning, coordination, communication, control, and performance evaluation. Planning. Target guides business operations, help in overcoming problems and analyzing the future. Coordination. Help to search out weaknesses in the organizational structure by isolating problems of communication, fixed responsibility, and of working relationships. Communication. Inform each other of what others have agreed to do. Also inform managers of the resources available to achieve objectives and targets. Control and performance evaluation. Department analyze their plans and submit estimates as per the requirements, justifying their demands by demonstrating a need at the time of formulation of budget. They become targets that set desirable limits on spending after budgets have been reviewed and approved. Actual expenditure and budget expenditure is compared as a means of judging performance and fixing responsibility for deviation at the end of the budget period. Thank you.